Hello and welcome to CRISIL Ratings podcast. I am Gautam Shahi, Director CRISIL Ratings. In today's podcast, I would like to share our credit outlook for ready-made garment manufacturers. The second wave of pandemic has unstitched demand recovery for the RMG sector. We expect revenues to now grow at 15 to 20% this fiscal, which is almost half of our earlier expectation. This growth is coming on a low base as revenues fell 23 to 25% last fiscal. As a result, demand recovery to pre-pandemic levels is expected to be pushed back by at least a fiscal. Domestic demand, which accounts for about 75% of the overall demand, has been severely affected by curbs imposed across the country. The first quarter of this fiscal is a near washout, with most domestic brick-and-mortar stores shut and sales through e-com channels also curbed. Significantly, the second wave has also hit hinterland, affecting sales of value fashion, which is the fastest growing segment. With vaccinations accelerating and caseloads decelerating, a gradual recovery is likely from the second quarter of this fiscal, leading to domestic sales growth of about 14 to 18% compared with a 24% contraction last fiscal. On the other hand, export demand has remained healthy and should log about 18 to 20% growth compared with the 16% contraction last fiscal because of improving discretionary spending in key export markets. Revenue growth will support operating leverage as well. Therefore, we expect an improvement in the operating profitability by 75 to 100 basis points to about 5.5 to 6% this fiscal, but it will still be lower than the pre-pandemic level of 8 to 9%. Prudent inventory management and normalization of debtor cycle will take working capital position of players close to pre-pandemic levels this fiscal, therefore also supporting their credit profiles. The credit ratio, which is the ratio of rating upgrades to rating downgrades, had plummeted to about 0.16 last fiscal, but that should now improve this fiscal as the credit outlook for RMG maker turns stable from negative. Any extension of lockdown beyond the first quarter will impact the domestic RMG sales, while resurgence of infections in key export markets will bear watching. With this, we come to the end of the podcast. Thank you for listening in and stay safe.